Welcome aboard Rocket Ship, the platform with the most relevant content for competitive examinations. This is Rocket Ship IAS Lab and continuing with our series on answer writing for general studies papers of civil services main examination. We take up a question that you might come across in GS paper 2. Here goes the question. Elaborate how tax receipts is divided among the union and the states in India. So basically the question requires you to talk about the constitutional provisions, that is what provisions the constitution makes to divide tax receipt among the federal units, that is the union and the states in India. However, before we introduce our answer, we have to caution you that this is going to be quite a factual type of questions. Basically, you would need quite some, you could say, base in the factual knowledge of this particular kind of questions. Then only you would be able to answer these type of questions and this particular question as well. So what we suggest you that whenever you come across these type of questions that require actual factual knowledge rather than your tendency to play around with the questions, which most of us have, this is going to be quite tough if you do not have a base in the actual fact connected with the question. That is why we would suggest you that you keep your running notes ready so that you can note down important points that we discuss along this entire lecture. Anyway, you would probably recall that India is a federal polity. Almost everyone here would agree that India is a federal polity. That is why the constitution makes detailed arrangement to demarcate the financial power of the federal and the state administrations. Please recall that federalism is all about demarcating the respective power of the central unit, that is the center, and the other states, basically the other units, basically the states and the union. That is all federalism is all about. This is mirrored, this is reflected in the case of taxation as well, where the constitution demarcates the taxation power of the center and the states differently. Part 12 of the constitution, please highlight this point, that is part 12 of the constitution enumerating articles 268 to 293 lists the provisions for division of financial powers. So this is a very important part of the constitution, part 12, and it enumerates the articles 268 to 293. Accordingly, taxation is divided as follows, that is quite easy to understand. Subjects on which solely the parliament can levy taxes. Then there are subjects on which the power of taxation is exclusive to the state legislature. Basically, the states only can tax these subjects. Concurrent power of the parliament and state legislature to levy taxes. Again, this does not need any explanation, but in this case, if there is ever a clash between the you could say tax legislation of the parliament and the state legislature, it is the tax legislation, that is the central tax legislation, the central tax law, that would override the tax law of the center, of the states actually. There are some residuary powers of taxations excluding the above three lists. Or if a new matter comes up, generally the taxation power on this subject, this new subject, would be in the hands of the center. That is all residuary power is all about. Various articles under part 12 further elaborate the arrangement of levying and appropriation of taxes. In this regard, the articles most notable are, so please highlight these articles. First comes article 268, which deals with taxes levied by center. Please be careful, the taxes under article 268 are levied by center but collected and appropriated by state. So you can understand very well that these taxes are actually levied by parliamentary law, but the taxes are collected and appropriated by states. This category includes taxes like stamp duties on various negotiable instruments. Negotiable instruments includes checks mostly. You almost everyone here would have seen checks once or more times in his or her life. Insurance, transfer of shares, etc. Excise duties, that is Article 268, also includes taxes on like excise duties on medicinal and toilet preparations containing alcohol. These also come under Article 268. One more thing that you have to note here, that the excise duties on medicinal and toilet preparations containing alcohol is not the same as excise duties on alcoholic beverages, which, as we would see later, which come entirely under the taxation jurisdiction of the state. Then comes Article 268A. Article 268 is actually repealed. It has been repealed by the 101st Constitutional Amendment Act of 2016 and subsumed under GST. It actually dealt with some of these actually service taxes which have been entirely subsumed under GST. That is why this article has been repealed. Then comes Article 269, which deals with taxes levied and collected by center but assigned to the states. Please note this difference between Article 268 and Article 269. That is, Article 268 is collected and appropriated by the states. But in the case of Article 269, the taxes are actually collected by center but assigned to the states. This is a basic difference between these two articles. The Article 269 was amended by 101st Constitutional Amendment Act of 2016, which introduced Article 269A. It deals with levy and collection of GST on supplies in course of interstate trade or commerce. The tax so received is apportioned between the union and the states as determined by law, that is, as determined by parliamentary law, on the recommendations of the GST Council. Basically, GST comes into play with regard to Article 269A, which deals with levy and collection of tax on supplies in course of interstate trade or commerce, basically interstate trade and commerce. And the tax proceeds of this kind, they are apportioned between the union and states on the recommendation of the GST Council through a parliamentary law. Then comes Article 270. It deals with taxes levied and collected by the center but distributed between the center and the states. This category includes taxes like income tax excluding on agricultural income. Please recall that it is Article 268 that deals with income tax other than agricultural income, basically the individual income tax as well as the corporate income tax. Sorry, there is a mix-up actually. Article 270 actually deals with the income tax, which excluding those on agricultural income and corporate tax, etc. Article 271, it deals with surcharge on certain taxes and duties for purposes of the center. As its very explanation suggests, the tax proceeds so raised under Article 271 would be exclusively used by the center. Parliament can levy surcharges on taxes and duties referred to in Articles 269, 270 except GST. Surcharges can be imposed on the items listed under Article 269 and 270 except GST. The proceeds of such surcharges are exclusively claimed by the center. That is, the states do not have any claim on the surcharges. Then come the taxes levied and collected and retained by the states. This includes taxes like professional tax, land revenue, taxes on agricultural income. Please recall that Article 27, it was Article 271, it was again, please, just a second. Article 270, it was Article 270 that dealt with individual income tax as well as corporate taxes. But the taxes other than agriculture, other than individual income, basically the agricultural income, they would be taxed by the estate and entirely appropriated by the estates. Mineral rights, alcoholic beverages, etc. to come under the tax jurisdiction, tax rights of the estate solely. And the conclusion we are coming to is the Constitution's detailed arrangement for division of tax receipts mirrors the division of subjects among the federal units. By now you can actually make out through our discussion that this closely reflects the federal principle, that is the division of subjects among the state, center, concurrent list, and the residuary parts, etc. The provisions, this is another argument that we are making. Please ponder over it, please think about it. The provisions, that is the provisions under part 12 of the Constitution, infuse true federal spirit in the polity, most apparent with the finance commissions under Article 280, an instrument created by Constitution itself. Basically, our founding fathers thought it so important to explain the distribution of taxes among the federal units that they created a constitutional machinery to recommend, you could say, the scheme of distribution that is called the Finance Commission, that comes under the Finance Commission, has been provided by Article 280. So all along we have discussed how the federal principle in India, how the federal spirit in India becomes manifest in the case of distribution of tax proceeds among the federal units as well. That is entire nub of the argument that we have discussed today. With this, we call it a day. We would reassemble for the next lecture in a few days. As usual, we wish you all the best. Thank you.